Hi and welcome to the market alert for Friday, the 17th of September 2021. So gold was monkey hammered yesterday as dollar and bond yields spike on a taper tantrum whatever that is. But they used the retail sales to move the markets higher as well. US retail sales unexpectedly rebound in August despite slump in car sales. But despite the beat, motor vehicles, electronics and shopping goods all saw sales plunge month on month. So this is a bit odd as well, isn't it? But the number was pretty impressive. If we have a look at this news for yesterday, let me just rewind here. You can see their core retail sales coming out higher. But the biggie was Philly Fed manufacturing. Just look at the jump in the manufacturing numbers there, 30.7 as well. So this helped to move the market to the upside. And then the unemployment claims coming in lower, weaker there, which moved the market up initially. Implied volatility also up yesterday as well, from 1440 to 1457, the market failing to hold. And we'll come back to silver and gold in a bit. I just want to start off by looking at the Dow. Again, you can see the market sideways. You can see they're doing their best at the moment to hold this market up. And that's why we've got this sideways channel building here down at this low where the last move to the upside occurred. So they're doing whatever they can to try and hold the market at the moment, even though the news, even though it's good, is then being sold into. So there seems to be a desperation at the moment to hold prices towards the upside there. Have a look at the 30-minute for yesterday. You'll see what I mean. The market moving higher initially with the news, which is this 30-minute bar here, and then just absolutely hammered to the downside for the Dow before the plunge protection team come in, rescue the market and bring it back. In the German DAX, we've got a similar picture, except we've got rising lows in the DAX as opposed to the Dow, where we've got that more sort of rectangular sideways move. Price is trying to get back above any of these fibs at the moment, particularly the 50% retracement, back above the 5-bar moving average, but you need to take out the 20 as well in order to move higher there. 30-minute here, you can see that yesterday morning the market moved higher, and not in any great range. I mean, there's only 100 points between these two blue lines. The DAX then selling off, moving higher initially, but once the Dow kicked off, moved higher, and then it absolutely slammed to the downside, moving the DAX, or taking the DAX along with it. At the moment, up on the overnight as well, above the DP, and heading back towards yesterday's high, and that's before the futures market even opens as well. So let's have a look at the metals markets. You can see yesterday silver absolutely hammered. I did mention this in yesterday morning's market alert. They started early, didn't they? And I did say that they would likely to give it a hammering, and they did, well and truly. But what's interesting, I spent 10 minutes or so just compiling a graph of where the silver price is in percentage terms compared to where it was in 2011. Now, the $47.89 level is the same, more or less, of 1979. So we're talking, 40 years of suppression of the gold and silver price here. But you can see at the moment that silver, based on yesterday's close, is 48% lower than the all-time high of a price of nearly $50 there. So according to the experts out there, and when I mean experts, I'm talking about the inflation expert John Williams of Shadow Stats, and he's saying that the price of silver should be anywhere from $150 to $600 based upon the inflation figures. So here we are sitting around that $22 area, which we saw yesterday, and it's just 48% of the 2011 high and the 1979, let alone where it should be. So an interesting graph. I'll update this periodically, but very interesting to see how low and what good value silver is at these levels. I mean, it's incredible, isn't it, to think that, it's $22, nearly 50% lower than it was in 2011 and 1979. And every other metal in the world, and including gold, is $1,000 higher than the 1980 high. So an interesting picture there. Let's have a look at this in a bit more detail. Here you can see yesterday the monkey hammering to the downside. This should be, if I'm not mistaken, from this low to this high. Yeah, bang on 89% low there. You can see that there, 22.60, 22.50 it nearly got to. Is the downside over? I suspect not. Personally, I've got a bit of a rally going on in the 5 minutes at the moment, and they're trying to, by looks of things, hold this at the moment, but I think this is not over yet, and that's why I still have my order in at $20. It's been there 4 weeks, as I don't think they're finished yet. I think another $2 to the downside, get down to $20, and that would be sort of the downside over in this market. Gold also hammered yesterday, not as much in percentage terms as silver, because you can see we didn't get anywhere near that low as we did with the silver, the lower when they hammered the market a few weeks ago. What was the date? It was the 9th of August, Sunday night. When they did that, going into the Monday. So you can see nowhere near with gold. So that will have altered the gold-silver ratio as well. Dollar moving higher is what they're saying for yesterday's move. Complete BS, we know this. And we also know that Biden's endeavouring to destroy the dollar as well, and doing a pretty good job of it. But as like I say, it's this sort of flight to quality, but quality of BS. Because all currencies are being devalued on the amount of debt that's being printed and created. So it just happens to be the better of a bad bunch, I suppose is the way to describe it. So let's have a quick look at the internals of yesterday's market. We can see that the DAX was up in the futures market and then traded sideways as soon as the market opened, but did manage to move to the upside there. And again, you can see from the close back above the 5-bar moving average that prices got nowhere near the 5-bar, again creating that momentum to the upside. And then eventually, of course, weakness will come into an up move, where you'll see prices there trading sideways. They try to hold, and then the market just drifts sideways. So all of the move was done in the first few minutes of the market opening, and then it just traded sideways and waited for the news. We had the unemployment news first, which is this one. That came out worse than forecast, which we've just seen, and that sent the market moving lower. But again, you'll see them buying in here. You've got this green volume here as the market puts its brakes on, and then reversing, and then we had the retail sales, and the market moving back to the upside there, combined with the Empire State Manufacturing, which came out higher than forecast. And then we kicked off in the afternoon, and the Dow moved higher initially, but then ran out of steam. And you can see this here. We got close to the scalp and the high, and the market then was just hit by selling a huge volume bar there, and then a second consecutive selling bar. The market was going nowhere. They tried to buy back here, but it failed, and then the market was sent into free fall as the Dow moved to the downside. And unfortunately, we didn't get just outside of the criteria for this bar here. But again, if you're reading the bars individually, you'll see that the weakness was already in the market there as prices failed to go through the high. And then the market's trading to the DP and just drifting sideways to higher before moving lower once more as the Dow finished off its move to the downside, and then the plunge protection team coming in to save the market in that sideways channel. Again, you can see them buying back in here. Huge volume compared to the previous bars, shake out to the downside. Let's see how many more we can get on the short side, and then we'll reverse the market and bring it back, which is what they've done there. Okay, that's it for this one. Let's see what happens today with regards to the stock market trying to hold and move to the upside, and also any sort of bounce back in silver. But like I say, I'm not convinced. I think there's still another $2 on the downside with a bit of luck, I hope so, because it will be well worth picking up at $20 an hour. So I'm hoping that's what they're going to do, to be honest with you. I'm quite happy about that and relaxed about it. 22, they could shake out to 20 if I'm already in, whereas 20 seems the sort of area that they'll want to move the market down to. Okay, that's it for this one. Have a great weekend, and as ever, thanks for watching. See you in the next one.